Welcome back. I've got with me two economists, John Luce from FNB and Owen Nkomo from Kunzi Investments. Now, let's dissect that decision by the MPC. John, let's start with you. Good decision for mortgage holders, but is it necessarily a good time to get into the market, because we do know rates are going to go up at some point?
Well, I think it's, getting into the market, most people are buying a home for a primary residence purposes. You can't wait for 15 years till the bottom of the super cycle or something like that to buy a property.
Yeah.
It's more about knowing what you're up against. You're at a relative low point in the cycle. They keep emphasizing upside inflation risks, desire to normalize the interest rates from abnormal lows where they are now. And so if you are getting into the mortgage and housing market, it's a case of buying well within your means and being able to take a few interest rate hikes. I don't think, just to comment on the decision, I don't think it was too bad a decision. The housing market's not irrational. It doesn't need cooling, particularly. Consumer credit growth is very low. That doesn't need cooling in particular. That's all under control. But I do think from a savings shortage point of view throughout this economy, where fixed investment grossly exceeds savings, i.e. current account deficit is massive, I think from getting domestic demand back into line with national income, from that point of view, gradual rate hiking is possibly desirable. And it was interesting to hear that two members did vote in favour of a hike.
Yeah, indeed. Yeah. Owen, that should send a few shivers down consumer spines, shouldn't it?
Yeah, potentially. I think one more vote there for an increase would have obviously had to even things out there. But I think that on the whole, if I look at the statement, it's more of the same stuff. We're concerned about energy prices. We're concerned about the price of oil. We're concerned extremely so about the weak currency as well. He mentioned that quite a lot of times. And broadly speaking, the picture is indicative of an environment that is deteriorating. And at the same time, he continues to acknowledge that the economy is not generating enough jobs. So it's always going to be a difficult one to try and preempt how the committee will go in the next meeting in July. I really think that if we continue to see more recovery out of the Eurozone because of the easier monetary policy stances being taken in Europe, and, for example, in Australia, if our economy does potentially start to show signs of improvement in the next coming couple of years, only then, in my view, would we start to say, we're going to have an interest rate environment which is more aggressive. I still believe, as I mentioned, the ECB is going to follow the USA in terms of interest rate direction. Even there's still inconsistencies in the data out of the USA. So there's no clarity in terms of saying when exactly are we going to see the interest rate increases start in the US. And also, I've just mentioned, in Europe, we are seeing a new spate of monetary policy easing as well. So it's a very difficult position to be in for the governor to try and give us more guidance.
John, in January 2014, we hiked by 0.25. Some said it was to protect the rand before the Fed hikes. Now, as Owen said, he said he's going to follow the Fed this time around. But in the meantime, there's been all this verbal intervention. Waving the finger, we're going to raise hike rates, and you better just watch what you spend.
No, I think it's good. It's a very good thing to do, verbal intervention. I think, from my world, which is the consumer world and the mortgage market, I think the early last year was a great time to just fire a little shot across the bows for the household sector, for the consumer, the retail banking sector, both of them, just to keep everybody sane and rational. Mm-hmm. And I think that's what it's done, which is good. The housing market is always a potential problem when it starts getting supposedly bubbly, when people start getting too excited. It was on the improving trend, before, in 2012, 2013. And you always want to keep the stupidity and the speculative activity out of it, I believe. You want to keep it rational. We know what happened in the boom years a number of years ago, and it all ended in tears. So the odd little, when you've got interest rates at abnormally low levels, there's always a danger of markets getting silly. And I think it was absolutely good timing last year to just surprise us all. I didn't expect it at the time, but to surprise us all with a little half in January and then another quarter in July. And I think it would be good if the Reserve Bank just carried on this gradual normalization and the verbal intervention as well. I think it just keeps everybody level-headed and borrowing or lending well.
But as long as demand stays as benign as it is now, can we make an argument that any possible hike is purely a rand play?
Yeah, I think that's going to continue to be the case. Like I said earlier, we unfortunately do not control the price of the rand. We are price takers when it comes to the currency's fortunes. If the dollar continues to strengthen, we will see the rand weaken further. We saw recently in the past couple of weeks with the dollar moving from 107 to the euro to 113, and the currency firmed up from about 12.25 odd back down to sub $12. So in my view, definitely the rand's weakness is going to continue to be a challenge in the decision-making process of the monetary policy committee here. Yeah, there's a whole lot of things that I challenge. If you look at, they do talk about other emerging markets here, where they touch on Brazil, for example, where the economy is actually going negative, and you must remember that we are traded internationally as baskets, the BRICS regions, etc. Only India looks like is facing a relatively firmer growth trajectory at this stage. But otherwise, everywhere else you look, the growth is benign. We keep getting downgraded as South Africa in terms of GDP growth going forward. I think that the status quo, yes, he definitely, I think if you could ask him for choice, he would say, I want to hike. But the variables that you have to look at, in my view, make it very difficult for him to make that decision.
John, this what Owen just told us about the global picture, the Reserve Bank pretty much agrees. Not much has changed since the last meeting. But can I beg to differ because of the data we've recently seen come out of Europe?
Well, yeah, a lot depends on the US, and for us with our commodities outlook, a lot depends on China. So it's very iffy. Yeah, there's maybe some positive signs coming out of Europe, but we're all a bit uncertain about China and how that's going to impact on commodity demand and commodity prices for our exports. And then the United States, a weak spot, isn't expected to continue like that. But if the United States does start hiking rates at some point, how does that affect the global economy? So there's a lot of unknowns. It's ticking along okay at the moment. Nothing much seems to have changed in the Reserve Bank's take on the outlook, but there are still, we must never forget that it's extremely lax monetary policy in the United States, the biggest economy in the world, and if and when should we say? I mean, it's just a question, more when they decide to start tightening. How does the world economy react? How does the US economy react? What we do know about the world is that it's solved its energy problem to a certain extent. So that energy price shock of 2008 is less likely to repeat itself with all the spare production capacity. What we haven't solved in the world is the debt to GDP ratio, which is even higher than in the global financial crisis. And that makes the whole world vulnerable to future crises. If the monetary authorities don't play their cards right, whatever that means.
We'll address that after the break. I'm interested in what interest rates can do for that. As I said, let's take a break, and then when we come back, more discussion on the MPC.